Hi guys, Max here, and this is your daily update for yesterday, the 11th of January. Markets were of course open and there was plenty to talk about. We had a couple developments regarding the Federal Reserve, some controversial words from Ray Dalio, no surprise there, and then just a couple other things, so let's just get right into it. Now, as usual, we will start with the markets, and it was a pretty solid day for stocks as a whole. The day actually started off a little bit rough, with the S&P 500, the Nasdaq and the Dow Jones all falling by about 0.5%. But after a few hours, a rally begun. Retail investors started to buy the dip, and at the end of the day, all three indexes closed in the green. The S&P 500 was up 0.9%, the Nasdaq was up 1.5%, and the Dow Jones was up 0.5% as well. Now this, of course, comes after a week where pretty much everything was falling in value, and there were fears that that would continue. Sentiment has, of course, been pretty rough recently, off of news about the Fed and Jerome Powell's intentions in particular, but there are also pressures on the American economy as a whole, particularly in the labor market, and of course, COVID is still causing heightened volatility as well. Now, stocks around the world as well mirrored the US and by and large rose, with the MSCI World Index jumping by 0.9%. The dollar actually didn't do too well, and it fell 0.4% compared to both the euro and the pound. Bonds actually did have a fair bit going on, declining across the board, and in the US in particular, where the 10-year Treasury fell 2 basis points. Now, it is worth noting that the yield on the 10-year is still sitting at 1.74%, which is still far higher than it's been over the best part of 2021, and the advances that we've seen over the last couple of weeks have not yet been reversed. Now, gold and oil both had a pretty damn solid day. WTI crude oil is sitting at almost $82 a barrel, seeing a 4% rise yesterday as well. Gold also rose across the day and is now sitting at $1,822 an ounce after seeing a 1.5% rise across the day. Crypto, as it always seems nowadays, moved in the same direction as the rest of the markets, rejoicing on the same news as equities. Bitcoin rose 2.5% across the day and is now sitting at just below $43,000, up from lows of around $39,000 the day before. Now, the rest of the altcoins moved in a similar manner, of course, although they did rise a little bit more. Ethereum, Cardano, and Solana all moved up about 4% across the day. In general, a strong day for crypto, no doubt. Now, that is what happened in the markets. Why did it happen? Well, it all boils down to basically what Jerome Powell said. Now, the first thing to note here is that Powell is notoriously wishy-washy, and he doesn't exactly have a strong spine. He has been making contradicting claims for a long time now, and as someone who basically amounts to just being a politician, albeit one with far more influence and control over the economy than most, this really shouldn't surprise us. He is always trying to say the thing which best achieves his goals. The only problem is that his goals do not align with what we think they are. Time after time, since the end of the pandemic, Powell has stated that his aim was to first stimulate the economy and then to stimulate full employment. But his policies have had only one real definitive outcome, and that is the inflation of asset prices. It really is so obvious that to deny it is to bury your head in the sand. His policies, his decisions, and his rhetoric have all been designed to not only maintain the current level of asset prices, but also to raise them on top of that. Now, why is that his goal? Well, it would be easy to say that it's because he's wealthy already, he's got a lot of money invested in the markets, and he wants to be richer. But here's the truth. He's already rich, and if more wealth were his only goal, he would have been insider trading like his associates were throughout the entirety of the pandemic. The reality of this goal is that it is to keep everyone else rich. The politicians who put him into this job, the executives who lobby those politicians, his friends who run businesses and manage capital. The aim is clear. It's to maintain the status quo, and that entails keeping the people who are already rich, rich forever, and this is to be achieved at apparently almost any cost. This is why he appears to be changing his mind so often, because he is listening to what the market is saying, finding out exactly what they want to hear, and then saying that thing right back at them to keep everyone happy and wealthy. At first, a few months ago, we heard that Powell had gone hawkish, that he had changed his mind about inflation and that it was no longer transitory. But he did this 5 months too late, when it was already abundantly clear that inflation was a serious threat. Now, why did he do this? Well, it's because the market was starting to worry about inflation. The market was worrying about how consumer spending would be impacted, how companies that might not have strong price-setting power might fare. And so Powell eased those concerns by telling everyone that he was serious about fighting inflation. This basically caused markets to rise in the long run. It caused investors to believe that the inflation situation would resolve. But because Powell didn't actually do anything to fight that inflation, because he was just talking, because he kept asset purchases high and interest rates low, the markets didn't get scared from Powell going too far in the opposite direction. He toed the line and told the financial world exactly what they wanted to hear. Next came the Fed's Open Market Committee in December, where they were to discuss the nature of the economy, the policies of the Fed, and most importantly, decide on interest rate rises and asset purchases. Now, at this point, the world was once again scared of inflation as it had continued to rise and no action had been taken to curb it. Elsewhere in the world, in the UK for example, central banks had already taken action, with interest rates already being raised in the United Kingdom. The Fed, though, once again toed the line perfectly and convinced the markets that the Fed was serious about fighting inflation, but it didn't institute too much of a change to scare off investors. Now, when this news came out, every headline on Bloomberg and CNBC was calling this a hawkish term for the Fed, but the markets aren't so naive as to believe all that nonsense, so they kept on buying. After all, the only announcement that the Fed actually made was that they were going to be buying slightly less assets in the future. They were still going to be inflating their prices, just not by as much as they previously planned. Now, the Fed and Powell claimed that they would be raising rates in the future, but that was months away and it was always subject to change. Of course, the markets loved this news. They were being told that the party is still on, the music is still playing, and there is still money to be made. Now, here is where Powell and the rest of the Fed messed up. And it only came to light about a week ago where we got the minutes, or basically the transcript of the FOMC meeting where Powell and co were talking about this stuff. They were speaking a little bit too candidly, and they mentioned that in the future, the Fed might actually have to reduce the size of their balance sheet, deflate the currency, and pull money back out of the markets in order to fight inflation, which would cause asset prices to fall across the board. They also spoke about how high interest rates needed to go to truly fight inflation, and the consensus was that their previous plans were not strong enough and they wouldn't really stop inflation. This pretty much instantly started a panic in the markets that led to the week of redness that we just saw, where American equities, but in particular tech stocks, fell pretty large amounts. Basically, the markets realized that tighter monetary policy was on its way, and the markets panicked and started selling off their riskiest assets. Bond yields started to rise as it became clear that monetary policy was going to tighten. Crypto even crashed as it's one of the riskiest forms of capital out there, so it's often the first port of call for an investor trying to de-risk or de-leverage their portfolio. The entire week was basically just a circle jerk between Bloomberg journalists and banking analysts trying to make sure they were adequately hedged against tighter monetary policy. So if that was what sentiment was looking like before Powell's confirmation hearing and his opportunity to speak to the world, what would we expect him to talk about? Of course, the only thing that makes sense for his point of view would be for Powell to calm the markets down, to tell them that it isn't so bad and that rates aren't going to rise too much and that the Fed isn't going to be selling assets anytime soon. And that's exactly what he did. Once again, he pandered to the political elite and dedicated his time to ensuring that asset prices remain high. What exactly did he say? Well, obviously, I can't get everything in here today, but I will tell you all the most important things, starting off with the stuff that made the markets roar and investors rejoice. So the Fed announced that they almost definitely won't be raising interest rates before March 2022, which means that the party is on for 3 months more at least, and that gives investors plenty of time to keep making some money while still managing their risk. Now, Powell also said that we will probably remain in an era of very low interest rates, which means that even when he does raise rates, he isn't going to go all Volcker and send them up to 15% to fight inflation. They're going to remain far lower than the inflation rate, for example. This is, again, music to investors' ears. It means that real interest rates will remain negative, so taking out debt is still practically free, and it's going to stay practically free for as long as Powell is Federal Reserve Chair. When he was asked if he was willing to raise interest rates to combat inflation, he basically claimed that raising interest rates won't aid inflation because inflation is caused by supply-side shocks, which firstly is utter nonsense. This is basically just his old transitory argument again with the word transitory plucked out. And secondly, this really paints the picture that he actually won't raise interest rates as high as is necessary because he's claiming it wouldn't even help. When he was directly asked if that was the case, he of course backtracked and claimed that he will do whatever is necessary. But from a man who has so far been all bark and no bite, this doesn't inspire me with any confidence. Powell was asked about what he thinks about the plans to reduce the Fed's balance sheet, and he basically didn't say anything. He said it would be done at a faster rate than previously seen, but considering how the Fed's balance sheet has increased over 500% in 2 years, I'd like to say no shit to that, Mr. Powell. Of course it's going to be faster. The assets to offload are 5 times as many. Of course, Powell did something he ought to be known for at this point. He refused to accept blame for his failings and literally claimed that nobody saw this inflation coming, which is obviously 100% a lie. Millions of us saw it coming. He just chose to ignore us and the data to pursue his true mandate of asset price inflation. Now, I think it's probably abundantly clear what I think of this development, but just in case it isn't, let me say this. Powell is failing to carry out his duties. He has been failing to carry out his duties for months now, and when presidents of the United States use the heights of the stock market to justify their ineffectual terms, it's no wonder why. Trump put Powell into his position of authority and he boasted about high asset prices. Biden kept Powell in his position of authority and he too is boasting of high asset prices. Now, there were a few other things mentioned during the Fed's hearing that I do think are worth mentioning, but they are in a slightly different realm to all the monetary policy talk. Now, the first thing to talk about is that the Fed now agrees that those on the committee and the board should not be investing in individual stocks, and we may actually see a change here. This was, of course, spurred on by Clarida's insider trading that took place in 2020 during the crash caused by the pandemic. And while this is by no means the perfect outcome, this is an improvement. Powell categorically refused to comment on Clarida's insider trading. He said only positive things about him as he left, showing a complete lack of character as is expected these days, and Clarida is not going to be investigated by the authorities for his crimes. He is not going to have to give back his ill-gotten gains and he will serve no prison time, but at the very least, maybe these new rules that will hopefully come into play will stop this from happening again. Next, we just need those same rules for senators and congressmen, but with Nancy Pelosi still alive, I sincerely doubt we'll get that far. Now, we also heard that the Fed's report on stablecoins is almost ready to be released after being delayed for quite some time now, and we got a snippet into what it might entail. Now, Powell basically said that stablecoins will exist in parallel with central bank digital currencies. What does this mean? Well, it means the US probably isn't going to be attacking crypto like China or India are anytime soon. This is good for the industry, although the threat of things changing in the future is always looming, and I fear we are still a long way away from any serious regulation in the crypto industry to try and protect consumers, clear up some legal considerations, and put an end to the ridiculous number of scams out there. Now, that is pretty much everything I wanted to cover about the Fed and the developments from that today, and I know that this video is already getting to be a bit long, so I'm just going to quickly cover a few other things that popped up today. Now, the first thing to talk about is once again the morally bankrupt billionaire Ray Dalio, who has claimed that the US needs some of China's common prosperity, which is absolutely laughable to say the least. He claims that the US needs to boost talent and increase fairness in the country, which is actually something that is a fair point and something I agree with as well. The only problem is that Dalio thinks the US should be more like China, which is literally committing a genocide right in front of our eyes. Dalio is practically a Chinese asset at this point. He's almost a spokesperson for the Chinese Communist Party, and he seems to be morally bankrupt on any issue that even remotely relates to China and their evil doings. Now, common prosperity, for anyone who doesn't know, is basically China's catch-all term to justify everything radical they do. Ban an industry from operating and educating children in the private sector? Oh, it's in the name of common prosperity, so it's all okay. Force a company to pay you a $20 billion ransom when you literally didn't commit any crime? Oh, don't worry, it's for common prosperity. Anyone who spouts any of this nonsense as a positive is either a bad actor, intentionally ignoring reality for some obscure gain, or just an idiot. And sadly, we know that Dalio is a very smart man, so it's pretty clear to me what he is here. Why is he supporting a genocidal regime that routinely executes people without trial, sterilizes women who they don't want reproducing, and murders doctors who try to warn the world about COVID? Well, it's because the Chinese Sovereign Wealth Fund is Bridgewater Associates, Ray Dalio's hedge fund's biggest investor. He is blinded by money. It's that simple, and he probably thinks that in the long run, it will be worth it to abandon all of his moral principles because the money is just so great. But I'll make it my damned life mission to ensure that he is remembered as the 21st century's equivalent of a Nazi collaborator, if that's what it takes for his legacy to be destroyed. I've made no secret about my plans for Stoic Media. We are growing, we are going cross-platform, and we're going to be expanding on YouTube as well. We're already getting millions of views a month, and it's only going to get bigger from here. Now, unlike Dalio though, I will not sell my soul for money, no matter how large the amount, and someone like me who is determined to ensure that morality and truth and goodness comes out on top should terrify someone like Ray Dalio, who is going to be spending his final moments on this earth trying to justify his actions, only to realize that no one believes him, that his legacy is dead and it lies in ruin, and that he'll be remembered as nothing more than a coward who couldn't say no. Now, I need to apologize for that rant, and apologize for the rant on the Fed as well. I know some of you like hearing them. It gives you a pretty damn good idea into how I really think about everything, especially when I get myself a little bit worked up. So I hope that wasn't too unwatchable for any of you, and I feel like I owe you all some good news before we sign off for the day. So we move on over to Europe, and in particular to Spain, where the government is looking likely to consider COVID as endemic like the flu, which will help the country move forward into the future and stop living in fear. The Prime Minister has been pragmatic and stated that a debate over whether or not COVID is endemic is absolutely necessary, and he's absolutely right and is doing the right thing here. Now, even if you think COVID isn't endemic and ought to be fought with lockdowns for decades into the future, I don't know how anyone can seriously argue that just talking about the issue is a bad thing. Spain is a democracy. It's not a particularly old one, but it is one that has made great strides in recent years, and it is absolutely right that a democracy should be able to debate, consider, and evaluate whichever problems it encounters. There's a tendency these days to claim that only one side of an argument can ever be considered correct, and that all critical thinking and debate has to be shut down for the good of society. But if these ideas are so infallible, then debating them should only prove that fact. Cowards hide behind mandates and diktats, and I'm very pleased to see Spain go in the right direction to take control of their own democracy and tackle things with pragmatism. Now, on a rather odd note to finish the video, I see a lot of people get quite confused about the Stoic name of my channel and what Stoicism really is, and the truth is that it is 1,000 different things to 1,000 different people. But to me, Stoicism is ultimately about pragmatism. It's not about repressing emotions or just outright refusing their existence. It's about acting rationally in response to what the world throws at us, tackling the problems that we can fix head on, and not needlessly worrying about those problems that are beyond our influence. It's in this way that I try to live my life stoically, and since making that conscious effort, practically everything in my life has taken a turn for the better. Now, that was a long video. Hopefully it wasn't too long or too ranty, but the developments from the Fed in particular really were quite important. I will see you all again tomorrow. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world-famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.